Hey everybody, welcome to the PlantStock channel. You're here with Mayur and me, Jesse. Today we're going to focus a little on OTLY stock, or quite a lot actually on OTLY stock and the newfound conviction that Mayur especially feels for this company right now. He didn't get all in, but quite close to it. He actually had to sell his Tesla and his house to be able to buy about 100,000 shares. And I don't have those kind of equities, so I actually had to sell my left kidney. No, seriously, we that's what we're basically going to talk about today. Why Mayur has gotten a bigger conviction. So that's what it's going to be all about. And guys, before we move into it, as always, like and subscribe. And if you want to be part of the Discord where me and Mayur talk on a daily basis when it comes to OTLY or Beyond Meat, Tattoo Chef, the very good food company, Tesla, take a look in the description. It's a free Discord there. And also remember that whatever we talk about here, guys, is just two friends interested in different stocks. Giving our opinions is not financial advice, so that's something to really keep in mind. And always, do your own due diligence. So Mayur, you're feeling that it's an attractive price right now?
Yeah, I think so. I think it was time. So I had bought, just as full disclosure, everything I say here is not financial advice. Please don't take it that way. And it's also not representative of my employer, Zacks Investment Research.
Yeah.
But I was looking at, the valuation of OTLY and, a common comparison that I've always been making, as a historical example of how to compare OTLY to is Monster Energy. I know they're completely different types of beverage companies, but at the end of the day, they are a beverage manufacturer. They have factories, they have, input costs, and, those types of things. They have competition, they have, similar dynamics, right?
Yeah.
It's as close as you can possibly get to having a competitor.
Yeah.
And Monster, traded, it also had very, very rapid growth throughout the mid 2000s. It had 40 to 50% revenue growth for several years in a row. And that slowed down to 30%, but even that continued for some time. So Monster was a 100 bagger, and it was highlighted in the book 100 Baggers by Christopher Mayur. It's a great book. And I'm using that as sort of a precedent, sort of an example to understand, what the future of OTLY might be, because I feel like OTLY has similar dynamics. It's a beverage company. It has viral marketing and branding. It has a brand that people really are attracted to, and it's got phenomenal growth at 40, 50%.
Yeah.
So it's, the idea here is, the way I think about stocks is, before you even invest in a company, you should understand, like, what is the problem that they're solving, right? There has to be a central problem that exists out there, a pain point, a sort of, something that causes difficulty or inconvenience or pain in the lives of people.
Yeah.
And then this company should be the best at solving that problem. So that's my understanding and thinking behind investing in Tesla. It just makes sense to me, right? Why electric cars should go to 100% market share. They're cleaner for the environment. They're faster. They're more fun to drive. And they're also going to be driving themselves. So that's like kind of a no-brainer to me that electric cars will take over, the gasoline engine.
Well,
In the same sense, I think that oat milk will take over traditional dairy milk. And we see data that's starting to show that this is starting to become the case.
yeah.
Right. And I can share my screen here. And there's this tweet by Second City Digest. He's a great follow if you're not following this person. But they tweeted out, a very, very interesting chart that shows the growth of market share of milk alternatives, which is basically plant-based alternatives versus the dairy milk industry. And it basically went from almost 100% in 2006, and you can see a very steady decline in that number. And at the same time, we see an increase in the share of plant-based milks. So this is a very, very important trend to be following, because this shows the growth of the overall category of plant-based milks.
Yeah.
Of which OTLY I believe, will be number one in market share. And it's already doing this in multiple different markets throughout the world. And we can see this in Oatly's slide deck, that they've already reached number one market share. And they are among the fastest growing companies too within the plant-based market.
Not only
Um,
the plant based, I mean, I would say one of the overall stocks in the US, I mean, 40 to 50% growth. That's not many companies that actually reach that level.
yeah, you're absolutely right. Growth. It's one of the best growth stories
Mm,
in basically the entire equity market right now.
yeah.
And I think the size of the market is so large that I think the growth rate of Oatly at 40 to 50% is going to continue for several years now. And Oatly's already laid out a roadmap for essentially global domination, where the goal is to have 9 factories up and running by 2024. So we're really not that far off from that.
And also, something
And
you've been talking about before is that they have actually already proven their concept, right? In Europe, they're basically profitable.
yeah, exactly. They are already profitable in Europe. We can see that in their latest earnings deck that they came out with. So the proof, there's already proof of concept that
Mm,
this business works and can be profitable.
yeah,
So that to me is essentially everything that I need to know as far as whether this business model can actually achieve profitability,
yeah,
right? And that's the number one question that we have for companies like Oatly, because right now there's many companies that have very strong growth, but none of them are profitable, right? And with Oatly, you can see this right here over the in fiscal year 2021, they were actually profitable out of Europe, right? Out of Europe, they produced positive EBITDA, 11.5 million dollars of EBITDA there. So that's not at the net income level. That's not at the net income level. It is at the EBITDA level. So but if EBITDA flips positive, that's actually a really good forward-looking indicator for net profitability flipping positive as well. And so that's the key metric that I'm looking at here, where they've already proven out that their factories can be profitable,
yeah.
and so now it's just a matter of ramping up that production capacity at these other factories,
Right.
such as in Utah, as well as in Singapore that they have right now.
Exactly. So, but would you want to disclose how much you actually went in with?
Yeah, so I bought 5,200 shares just yesterday, um, at a price of $3 and I believe it was 84 cents,
Hmm?
384 roughly.
Nice.
So that brings my my total share count up to roughly 7,500 shares total,
Awesome.
and my average price is about $4.40.
That's an amazing average.
Yeah.
So, well, I actually decided also today. I already had a few stocks. I'm not sure actually now when I'm looking at the average, but probably we're talking about. Ooh, what could I have a total of now? 4,500 to 5,000 shares. I went in about 2,800 today. I had to actually sell out of 1/3 of my Apple shares. And that was tough for me because for me, I love everything about Apple. Once you go Mac, you never go back for me. But I just felt like I can't see them 5xing or 10xing anytime soon. And considering what I see with Oatly, I could definitely see them doing that in the next 5 to 10 years. So where do you see them in 5 years from now?
Yeah, I think that this can be, if we look at exactly what their targets are for production,
Hmm.
right? And that's also in this slide here as well. Let me just jump straight to that here. And by the way, this is kind of the roadmap too. This is why I love Oatly's slide deck. They talk about exactly where their factories are, where their future planned factories are, but also they talk about how exactly they plan on reaching profitability.
Yeah.
Because remember, their long term goal is to achieve 40% gross margins and 20% adjusted EBITDA margins.
Yeah.
Um, Now, I think their gross margin is on target of 40%. I think they're being conservative on the adjusted EBITDA margins, though. So I think they can actually exceed that 20% mark.
Whoa.
And this is how they plan on doing that, right? Right now, margins are low because they are heavily reliant on co-packing and co-manufacturing. This method is great for just simply launching quickly and getting to market quickly. Because remember, from the perspective of the consumer, if your product is not on the shelves, if your product is not in the refrigerated section, then they're just going to pick the next best option, and that could be a lost customer because they could get involved and associate with another brand, and therefore, it would be hard to earn that business back. So every food manufacturer, especially when you're first starting out, you have to forget about margins and just focus on making the best product and getting it out there, in front of customers as fast as possible. So, in order for these companies to do that, before they can get all of their assets in place and get production up and running, they instead have to rely on co-manufacturers. So they outsource manufacturing to a third-party manufacturer, and they do it for you because their assets are already up and running. Their factories are already up and running. So that's the quickest and easiest option to get to market, right? But there are higher costs associated with that, and therefore lower margins for Oatly.
Yeah.
So right now they're still reliant on co-packing, and this is the same thing with Beyond Meat as well. They're also doing this as well. So Oatly and Beyond Meat are kind of in a similar sort of stage in their life, which is that they still are reliant on co-manufacturing to get to make their products.
Right.
So right now in 2021, 45% of their total volumes were co-packing, co-manufacturing, right? The target is to get that down to 10 to 20%, and to get to end-to-end self-manufacturing to 50 to 60%. So that's their long-term, target. I believe that they're going to get that by the end of 2024, and that's when their targets are for getting these factories up and running. You can see
Right.
that the UK factory is expected to close by 2023. So are their Asian factories in China, as well as their Texas factory in the US. So 2023 will be another year of high costs and high capex and high depreciation. So then once these factories are up and running to max capacity, I think 2024 will be their first year where they can reach, full scale profitability across the entire company.
All right.
2024 is my target there.
Yeah.
If they can get to these volumes here, this is their production, sort of target of 1,300 million liters of oat milk production per year
Yeah.
by the end of 2023. So I think they can get to, depending on their ASP and what categories that they enter by that time, I think they can be doing 2 billion plus in revenue by by the end of 2023, and then up to 3 billion possibly by 2024.
Wow.
So that would be a very, very aggressive target, but I think it's done. I think it's doable because I
Yes.
mean it's simply a function of getting these factories up and running. They've
Yeah.
already laid the groundwork to do it, and the demand is there. They're basically selling everything that they can, and they're taking market share away from the dairy milk industry. And this is an industry that I think is highly, highly vulnerable, because people are not clinging to dairy milk like they are to their steaks, right? Getting people to quit steak is a very tall task.
Yeah.
Getting people to quit milk is much, much easier,
Yeah.
especially if you have an alternative that tastes great, that's nutritious, and can act like milk does in a variety of different applications. Like, for example, chai. I'm a huge lover of chai, Indian masala chai, and Oatly is amazing in making chai.
Yeah. We're gonna do a
And
taste test soon.
yeah, we're gonna do a taste test. Yeah, And I have tried every type of plant-based milk out there. I am a plant-based, maniac. Um, so I've tried it all, and none of them do quite as well of a good job as Oatly's oat milk does. I've
Right.
even tried other oat milks too.
Yeah.
I find, Califia Farms to be a little too watery. I find Planet Oat to not have the same type of viscosity, meaning you have to use more Planet oat milk to achieve the same level of darkness or light coloredness.
Yeah.
Like, for example, if you take, let's just say, 1 ounce of, let's just take one shot of espresso, and if you add it to a 6 ounce um, glass of Oatly, that resulting coffee is lighter in color than if you were to take that same shot of espresso and add it to 6 ounces of Planet oat milk.
Wow.
So the Planet oat milk gets a lot darker in color, much darker than Oatly, which tells me that Oatly is able to absorb coffee a lot better, and it just tastes better. It looks better. It's more appealing. So I think this is going to come out in this video that we make. But I think Oatly has a moat in the form of branding, but also in the form of production capacity and in taste and texture as well.
Yeah.
So I think the trifecta is there for Oatly to basically become the number one market share leader. Right now, they're lagging Planet Oat as well as Silk. Silk is owned by Danone, I think,
Yeah.
which is I believe it's a French company.
Yeah. It is.
So yeah, they're number one in market share in the U.S. so far right now.
They're
But
probably
I
the
think
largest plant-based, the largest company that owns plant-based milk companies, because I think they own Alpro also, which is really huge in Europe. I'm not sure about the US.
yeah, we don't have Alpro
Okay.
in the U.S.
No, it's probably Silk. I think it's their equivalent then.
Silk,
Yeah.
yeah, Silk is the equivalent.
Yeah.
Yeah.
So that's basically what they're facing here,
Mhm.
which we'll talk more about definitely. But I thought like to just wrap it up here. We're gonna definitely talk more about this. So basically, I know that the subscribers would be interesting to see because you went in so heavy now, and why I also went in quite heavy for being us. Uh, where do you see the stock price in the next 3 to 5 years in the medium term?
Yeah, it's a great question. So, like, if you were to just do a simple exercise, let's say they get to $2 billion in revenue. I think that's conservative, right? Their target is to reach 1,300, 1.3 billion liters of oat milk production by the end of 2023.
Yeah.
If that equates to roughly $2 billion of revenue, and let's say they can get to that 20%, adjusted EBITDA margin, which I think they will get once they ramp up and reach maximum volume output from these 9 factories globally. I think they can definitely get to 20% adjusted EBITDA margins. So on, let's say, a $2 billion revenue base, 20% adjusted EBITDA margins, that gets you to about $400 million in adjusted EBITDA. And I think if you put a 20 multiple on that, $400 million of EBITDA, you can see exactly where this goes, at that point, right? Um, the stock trades at roughly $2 billion market cap today as we speak right now, I believe. Let's see where we at exactly. Let's check it out. And yeah, the market is really getting hit today. But yeah, Oatly is down to about, $2.25 billion in market cap. It's down about 9% today, down to about 349. So, if we were to look at, just a simple, multiple to EBITDA, 400 million, times a 20 multiple on that, that gets you an $8 billion, valuation
Wow.
on enterprise value. And they currently have more cash than debt. So, their enterprise value is actually even lower than their market cap right now because they have more cash than debt. But let's just take that as your, market cap. Um, that's almost a 5 bagger. I mean, a 4 bagger. in about 4 years.
Mm.
So I think that's the multiple that I think that that's the market cap that they will get to.
Yeah.
You know, $8 billion in total market cap by the end of 2024.
That.
And that's based on a very, very tame multiple too. A 20 multiple on EBITDA is low for a high growth company.
Yeah.
Um, we haven't even talked about ROIC. It's a very, very important concept. I think Oatly will be very, very efficient with their capital because relative to say dairy companies, because gross profitability at 40% is a very, very strong indication of what their ROIC might be. Remember, anything companies that do ROIC of like 15 to 20%, meaning their total net income relative to their total capital base, right? That's the real way of thinking about how profitable companies are. It's a lot better than looking at margins, in my personal opinion. And these books like Hundred Baggers and some of the greatest investors, Peter Lynch, Charlie Munger, Warren Buffett, they all talk about the importance of ROIC.
Yeah.
I think that they can continue to do strong, 15 to 20% ROIC, which means that a 20 multiple to EBITDA is considered pretty low. It could be a 30 multiple, it could be a 40 multiple,
Yeah.
depending on their growth rate at the end of 2024. But even if you take a very reasonable multiple and a reasonable revenue base, right? They're going to do $1 billion, almost $1 billion of revenue this year. So I am expecting, $2 billion by the end of 2024. That's just taking a very conservative viewpoint of it. So you can see that even if we use reasonable or even conservative numbers, um, the upside potential for Oatly is simply staggering. Yeah, no. So I think an $8 billion market cap, by the end of 2024 seems very reasonable, based on targets of what they've already talked about in terms of their factory production and ramp up, as well as the sheer demand of their products. Right, you can see that the sales velocity is very, very strong. They are the driver of this category, as you can see in some of these slides here.
Yeah.
So, I think production is key. I think Oatly, in a nutshell, is in a very similar situation as Tesla, where revenue is a function of production rather than demand.
Yeah.
Demand is already exceeding their production capacity, so that's why they're basically selling out almost every single week or every month. Every time I go to the store, I see Oatly basically missing on the shelves, right? So
Yeah.
production is a problem right now.
Yeah. I've
So I
actually
think that,
I've seen
yeah,
that in many discourse or in several different forums. People all around the world actually stating that it seems to sell out quite quickly right now.
yeah.
Mm. So, but just to get it clear though, because you were talking about 4 years before, but you're saying in the end of 2024. So, could we reach 8 billion in market cap, but in 2.5 years?
I think so.
Yeah.
I think so. Just based on extremely like I just laid it out, like just 2 billion revenue,
Mm.
20% adjusted EBITDA margins on that 2 billion in revenue.
Yeah.
That gets you 400 million in adjusted EBITDA, and if we were to take a 20 multiple on that, that gets you to $8 billion.
Yeah. Exactly.
So and the stock is trading at 2.25 billion today. So I think the roadmap is very, very clear. The data is clear. Sales velocity is exceptional.
Yeah.
Revenue growth is exceeding 76% over the past 3 years. That's going to continue at 40 to 50% over the next several years. The numbers and the statistics are very, very convincing. Number one, in not just sales growth, but also in velocity.
Right.
That's also very important to know as well, velocity.
Yeah.
Because remember, you can increase the total number of outlets, and therefore that increases your revenue. But if each outlet, right, points of distribution, right, TDPs is what they call it, total distribution points. If each of those are reducing their revenue, meaning if one location is basically cannibalizing another location, then that sales growth is still impressive, but not as impressive.
Yeah.
But if you have strong growth and steady or even increasing velocity, that means that everybody is selling more together, even as the total number of distribution points increases over time.
Right. All right. So, guys, there you have it. Now you know the reason why Mayur and myself are way more bullish on Oatly at this point, why we've actually gone in much harder now with our hard-earned cash. So, and we're definitely going to, keep you updated on this company. We're going to talk more about this company. We're going to probably have quite a lot more videos in the next couple of months. So, guys, if you want to be part of this channel, make sure that you subscribe. Don't forget to like this video so we'll get it out to more people out there. And if you want to connect with Mayur and me, make sure to join our free Discord channel down in this description. And also make sure that you're part of Twitter and go check out Mayur and Twitter with you're up to around 16,300 people now, right? Who are interested in basically what you talk about when it comes to Tesla, TDoc, and in Vitae, right? Usually, and now,
Invite, yeah.
yeah.
Now, I have a feeling my follower count is going to drop to like 20% of what I have right now, uh, since Elon Musk is taking over Twitter and killing all the bots.
Okay. Well,
So
that could be a
half of those
good.
are from the bots.
All right, we'll see. But again, guys, as always, this wasn't financial advice. So remember, do your own due diligence. All right, guys. Thank you for today. Thank you, Mayur.
All right, see you guys.